Okay. Okay, good morning, everyone, and welcome to another episode of the Crypto Hour. Lots going on this week, both on crypto and the normal macroeconomic news. So we will go straight into it, and I'll start talking about the economy first, and then we'll move on to crypto. So let me share my screen. Okay, let's start first of all from the general economic calendar. I mean the news this week. There's a couple of big announcements that generally move the markets, and it's the main one is coming today, which is the non-farm employment change. So the difference in jobs creation in the US in the non-farm sectors, and also the unemployment rate. But there's been already a there's been already on Wednesday. There's been the precursor to that announcement. Where are we? Sorry, looking for it. Okay, so it is like another pre-announced on Tuesday, and the final numbers will be released today. But from what we see, kind of like the GDP in the US is still holding strong at the moment, although we have seen a slowdown of prices, especially at the production level. So we can see this yesterday, this PCE price index, which is the government's preferred measure of inflation. So this has gone down from 0.5% last month to 0.2, which brings the kind of like the yearly total for this measure of inflation. And you can read more, with all these things, you can open and read more about it. So this measures goods and services targeted towards and consumed by individuals. This brings the kind of this inflation measure to around 5%. So numbers are started showing a slowdown, kind of like of pricing increases going through the economy, and kind of like the companies now have shown through different, you can see here in the manufacturing PMI as well, that they have less an inclination to raise prices in the coming months, because the market cannot take the increased rates in prices. So in a way, so this is kind of like at the moment the big dilemma for the markets is understanding how fast and how quickly will the monetary committee increase interest rates in the US, and when they will think that inflation has slowed down enough to kind of stop increasing rates and start say either coming down or actually decreasing it, and start injecting money into the economy again, because they are because the economy into recession. So so there are kind of like two contrasting measures. From the point of view of, we still have consumer spending that it's positive, so it hasn't stopped. So at the consumer level, the spending hasn't stopped. It's still showing kind of like a healthy economic activity. But at the same time, kind of like the future looking indicators, like we can see here, manufacturing prices going down to below 50. So that means that the manufacturer expect to actually lower prices rather than increase them. And it is kind of like, it's considered a leading indicator of inflation, because businesses expect to kind of pay less for what they buy, and then that will be would then reflect in the prices of the goods they produce. So while we're waiting for this kind of like announcements today, and it will come early afternoon at the UK time, It will be kind of the opening on the market opening time in the US. In the meantime, we had and kind of not announcement in terms of numbers, but we had the Jerome Powell that was speaking on Wednesday, and this is interesting because in his speech he was talking tough. Okay, so he's talking tough. So it's not time to to stop in interest rate increases. Because we need to see more concrete numbers in inflation to show that the inflation is being controlled, etc., etc. But the funny thing is that the markets did not believe him. Okay, because obviously the markets are waiting for this plateauing of interest rates, and this, so that they can start planning again for the future. And this is, I wanted to show you, this is the dollar index. Okay. And this time here is the time of the announcement, pretty much. Okay, so you can see, so this is the dollar. So the dollar basically is getting weaker because people expect for the interest rate rises to slow down, or they expect the inflation to have kind of reach its peak and to start decreasing from now. So as you can see, the normal reaction, if the markets believe Jerome Powell, would be there for this index to go up, for the dollar to get stronger, because people expect inflation to to get for the interest rates to go higher, so people that then could invest more in bonds, etc., etc. I mean, we can see that, for example, in very different things. I know that there's some people from Australia. Okay, we can see that within the same time frame, the Australian dollar has actually got stronger against the US dollar, and this is kind of like, when we start looking at these are kind of inflation rates across the world, and we can see that this month compared to the previous month, we're starting to see the inflation numbers mostly going down across the world, with some exceptions. Australia is one of these exceptions. So if you see, we're going from 6% to 7.3% inflation. So obviously the market is expecting further rise in interest rates in Australia, and so this is why the Australian dollar is getting stronger. Okay, so all these things are very closely correlated, and if you want to have an understanding of how things are going, I mean, everything starts from here, because these central banks have to react to inflation because they have a mandate to control inflation, to keep it in a certain band. And until it gets back into the band, they start having to, they are kind of like crude measures that they can apply, but the main measures are, interest rates and money supply. So at the moment, all across the world, after the money supply gates were open during the pandemic, and now everybody's closed them, so they're reducing the money supply everywhere. Interest rates are going up, so they're trying to reduce economic activity to control inflation. Now, and we can see there's several articles here that talk about this, and we can see, so the Federal Reserve's hawkish messaging is not being believed by the markets. So they are the two things. We talk about hawkish when they are being tough, and dovish when they are kind of like being less aggressive on the market and talking about easing. So we can say that these are the two things that everybody has looked at. Although he was talking tough in his speech, this PCE outcome is showing us a different figure, especially with the numbers coming from the manufacturing service. It is showing that excuse me, it is showing that businesses are less likely to raise prices in the future, because I don't think the economic conditions allow for it. So going back onto crypto now, and let's have a look how in the same time how Bitcoin, the crypto market, is doing. Now, we've had a as we can see, slightly recovery from. So let me just make this smaller so you can see. So we touched really low levels, below 16,000, and the market now seems to have recovered slightly to, to $16,000 to $17,000 range. Now, something quite interesting happens today, because today is option expiry day, and there are lots of traders that entered put options, so they were betting on the market going down when the market was at these levels here. And so you can see that the price at the moment is just below 17,000. And that's very significant because, if the options, if the market closes at below 17,000, then a lot of people with their bet on the market going down will save a lot of money. So there's a difference of more than $100 million, riding on a few dollars level in Bitcoin. So, today expect the kind of like a little bit of volatility to see in Bitcoin, but we'll see that this level will be fought hard, the $17,000 level, because of what's happening in the background. The normal activity will resume tomorrow. Okay, but strictly speaking, now there is a question. Thinking, where are we going from now? Are we already hit the bottom, or are we going to see a further capitulation like many people are expecting? And this is the question, because in the stock market, everybody expects, we're in December now, everybody expects a kind of like a Santa rally. Kind of like a good, before Christmas, the prices to go, generally of the stock market to go up. But crypto at the moment is in a moment of decision, because there's a big elephant in the room, which is the digital currency group, which is, I'll show you owner of quite a few. Where I will put this in, overall owner of quite a few groups. So as you can see, so the digital currency group is the kind of holding company which owns, you might have heard about Grayscale. It's a big fund manager for Bitcoin, Ethereum funds, and other smaller funds. Also owns CoinDesk and Luno. For those of you in South Africa, maybe I would have interacted with Luno. This is owned by Digital Currency Group. And also Three Arrows Capital, and they have a venture portfolio and investments. And also they own Genesis Capital. Okay, and Genesis Capital is the company at the moment that is into trouble. So, and let me just, hopefully you will see this on screen. Let me just bring it up. Can you see this screen now? Prologue background. Can you just give me a sign? You can? Yeah, perfect. Okay, so this is the problem with Digital Currency Group at the moment. They have a kind of like a shortfall of about $1 billion, because at the moment they stopped withdrawals for all the users. So what can, I mean, this is a big group, and it is kind of like well capitalized in general. I mean, talking about DCG. So it's not a given like with other exchanges that when this happens, normally then they go, unless they can be saved, somebody can buy them, then they go through bankruptcy, etc., etc. But they have different options to them in general. So they could agree an out-of-court settlement to reduce the amount they owe to creditors. They could go for a bankruptcy filing. This probably would be the worst option for crypto, because it would take a long time, and customer funds would be locked in the company and not being able to be reinvested in crypto. But also there could be a refinancing and capital infusion at the parent company, then allow Genesis Capital depositors to withdraw funds, or then roll the funds over into a loan to the DCG group. So this probably would be the best option for the old crypto, as crypto could move on without having this sword like dangling over their heads. But as you can see, this could start if the worst option was to happen, kind of like a bankruptcy filing, creditors, suing to get the funds back. Now this could start a cascade because it could involve, not just Genesis, but it could involve, Luno, for example, which is a crypto exchange. Foundry, which is a mining and staking infrastructure company, CoinDesk, but also Grayscale Investments. I mean, it's personally, I think this is kind of like unlikely to happen because they have a very, Grayscale is the cash cow of the company. So it generates over 300 million per year. So locking this into a bankruptcy wouldn't serve anybody, because including the creditors. Okay, and I think they will. It looks like that more and more people think that now a solution will be found to this, which is more of a liquidity issue than a solvency issue. So this is what is looking, and there are kind of like prediction markets that a couple of weeks ago expected, Genesis to go bankrupt. Bankrupt, about 80% of people expected the bankruptcy to happen. Now that number has gone down to below 60%. So it's still a high number, but it's kind of, it is looking more and more likely that a solution may be found, to this problem. And this will allow crypto then to start trading in a normal way. Because at the moment is, if you see, we having a kind of like a slight resurgence from the low, but nobody will take kind of like high stake bets on the price going up because there is this big risk hanging on everybody's shoulders that if Genesis was to fail, we could see prices at $12,000-$13,000 level for Bitcoin. So obviously nobody wants to take a big position right now. Okay, let's move into something else. So inflation rate. Okay, so one of the thing, the fallback from the FTX collapse is this kind of regulation. Now, this fall of FTX, affected many people. They had money depositing in the exchange. So obviously, all this is coming. When people are unhappy, then they obviously complain to their representatives. And now the Senate seems to be intent in pushing a regulation for cryptocurrencies as a result of this. But the good, kind of like a good news out of this, it seems that the agency tasked with the regulation of crypto will not be the SEC, but will be the Futures Commodity and Futures Trade Commission, the CFTC. So they are, at the moment, they're going through the Senate is trying to give the CFTC the powers it needs to then regulate crypto. It is good because in a way, this is the agency that regulates futures, options, commodities, and derivatives in general. So it will put crypto into that kind of like in good company. If you can, if that's the way you can put it, and I think that at the moment, although we need to see how the regulation and the details, the devil is in the details all the time. We need to see what the regulation will say, but the fact that regulation will come is a given. And the moment that it comes will give more clarity to the whole industry. So the industry then will be able to grow knowing that, it's not the Wild West anymore, but there is a regulation connected to this. And obviously, even from a crypto enthusiast like myself, there are two areas for me that needs to be regulated. The first one being stable coins, and the second one being centralized crypto exchanges. So those are two areas that need regulation, because something like what happened with FTX, where it looks like customer funds were badly mishandled, it shouldn't be happening. It should be segregated funds in the similar way that the banks use the customers' deposits, but there should be definitely some regulation behind it. Now, before I've got a few other things to talk to you about, but one thing I want to concentrate on is also safety. And this is kind of like a new article of one new type of scam that I hadn't come across before, but I know this is regarding crypto bots. Okay, so for those of you, especially, I know that there are many people in the community that are kind of like keen to use bots, to make money. And now you got to be very careful which ones you connect with, because there is a scam. There are several scams going on, especially on YouTube, promoting scam bots that will do nothing else than clear your account completely. Okay, so this is how it works. The scam generally sees victims being guided to downloaded fake bot software, okay, which is designed to swipe their assets once they try to initiate a front-running transaction. So what they say is that, oh well, we'll do our transactions, we've got this special software that allows us to front-run every other crypto exchange, and we basically will get all our or it'd be an easy way to get great return. So people then are invited to download this software, connected with their account, and that's when what is happening then on the background. Their accounts are completely wiped clean, and they lost all the funds that they had deposited. Okay, so and the one thing you need to be careful of is a lot of these scams are in the recommended video section of YouTube and Google, because they pay a lot of money for advertising. Okay, and we've gone through this before. YouTube, Google, and the other search engines have got no interest whatsoever in getting these scammers down, because they make a lot of money of it. It's as simple as that. I know it's sad to say, but they don't need this money. They're big enough companies. Especially talking about Google. But the reality is that many have tried warning them and telling them to take these videos off, and they never do. Okay, so you need to be really careful and not to download stuff from the internet, especially if it is promoted on social media. And I consider YouTube to be a form of social media too. So be careful there. Now, moving on to different, see how we're doing, 8:20, so we're doing quite well for time. So, and these are kind of like more serious companies, like Kraken is obviously one of the main crypto exchanges, and one of the ones that are probably the safest. Kraken, Binance, Coinbase are probably this, kind of like the safest exchanges out there at the moment. And they're reducing. So basically, to be able to cope, to make sure that they don't go into a crisis situation like other exchanges, they're reducing their staff. So from about 3,006 to 2,500 employees. But that would put them in a position to put in a good position when the market starts recovering again. I mean, this number was really increased during the bull market, when they saw, like any crypto exchanges, saw a really exponential increase to the number of clients. Okay, so it's a good news actually that they didn't, they weren't affecting any worse than that. And also, I think part of this was that Kraken had to pay penalties connected with violating US sanctions against Iran. Okay, so they had agreed a fine of $362,000, which at least puts this business behind them. It takes any doubt about their exchange, in the past. So they are although it's kind of like obviously they are laying off staff, so it's never a good news, but you know, I think it's a positive take on the future. Now, I wanted to concentrate a little bit. I know we talk a lot about Cardano here, so I won't talk about it today for once. But I'll talk about another interesting project, which is Avalanche. So, and also I wanted to make you understand the difference. Like, this is an article that talks about Avalanche and the number of transactions being transacted on the blockchain. Now, and I was saying kind of like the monthly transaction got to the 68 million level in September and October, so a level never seen before. So they are at the top of the number of transactions actually processed by the network, but that doesn't mean anything for price. So, and we've seen the same things in Cardano. I was thinking where the numbers on chain kept going up and up and up every month, but it's not necessarily reflected in the price. I mean, this is because we're still in a kind of like a new market, and a lot of people still don't understand how to price it correctly, because they're more based on hype, you know, and that on actual data. So you can see that the price action and the activity are kind of like not that highly correlated at the moment. But the thing is that for the long-term future, these are the numbers that we should pay attention to that will indicate if a blockchain is going to be successful or not going forward, because it means that there are more people using it. At the end of the day, you know, any business, any consumer business, you know, is measuring how many people they manage to reach, you know, and how many people buy their goods. So in, you know, blockchain usage, it's basically is the project selling their goods, because they sell all layer one projects are basically selling block space. Okay, so more people use their block space, the better a project is doing. Okay, so these are numbers that we really want to have a look at and indicate so how well a blockchain is doing, how well the ecosystem is working, because that's not you know, in projects like Avalanche, like Ethereum, like Cardano, you know, people don't just buy the tokens for, you know, for as an investment, but they buy the tokens to pay gas fees on those networks. Okay, so even if you're involved in a small, in kind of like a layer 2 projects on these chains, you will need to spend some of these tokens. So in a forward-looking way, we need to. This can be kind of like a leading indicator of how well blockchains are doing. Okay, and as a extra news from Avalanche, we have the main exchange, decentralized exchange on Avalanche is called Curated. Okay, and now they've announced that they are starting to go cross-chain. So they also, apart from being on Avalanche, they now will release their product also in the Ethereum ecosystem through the Arbitrum blockchain. Okay. Which is a layer 2 scaling solution for Ethereum. So it kind of like all these kind of announcements we'll see more and more as we go, as the blockchain world matures. Excuse me. As as one of the main like nuts that all the projects are trying to crack is to being able to offer customers in different ecosystems, you know, connection to their services. Okay, so so we have seen the success, especially in DeFi. Like some projects are just exist in one blockchain, one ecosystem, but especially some of these DEXs now are started to release their product across a number of different blockchains. And because at the end of the day, what they, the blockchain, once they, so Avalanche, Cardano, Ethereum, Solana, they all want people to use their own blockchain. Okay, so they're trying to promote the use of their own blockchain. But from the point of view of an application, which is like Trader Joe is, the only thing they care about is attracting more users. And at the end of the day, it's, yes, they were born in a certain ecosystem, but they will go wherever the users are and trying to get the highest number of users for their product. So this will be seen more and more. And there are projects that are like, for example, Polkadot and Cosmos. They are particularly kind of pointing towards this area to being kind of interoperable between blockchains. But even on other projects, so even we've seen in Cardano, we've seen in Avalanche, we've seen on other different ecosystems as well, there is a push to be to attract different areas of users. Just a couple more things, and then we'll go on to questions. So there's a bit of a kind of like a tug of war going on between Apple and some crypto wallets, because Apple wants to charge basically for people to use the apps on the Apple Store. So they are trying to charge 30% of the Ethereum gas fees as a fee to use the app on the wallet. So this came up for the Coinbase, not the Coinbase app, but the Coinbase wallet, which is a decentralized. It's a decentralized wallet, the same as MetaMask or the Brave wallet or any other decentralized wallet. So to the point that they had to take Coinbase wallet out of the Apple Store because Apple insisted and wanted to charge this tax to offer the functionality of transferring NFTs directly on your phone. And so it's kind of like, obviously it's a problem because it stops kind of like adoption of these products and make it more difficult for people to use them. We'll see what comes up. I mean, I don't know if these things may be preceding a release by Apple of their own branded solution to do these things. So it could be near, because otherwise they would have found a solution to collect money through this app without having to stop this altogether. Okay. But this is basically Apple's claim is that the gas fees required to send NFTs need to be paid through the in-app purchase system so that they can collect 30% of the gas fee. And now, obviously, it would be a big problem, because that would mean that things done through a mobile will cost more than things done through a desktop, for example. So I was saying it's quite kind of like you can see what Coinbase are quite irked about this. This is like Apple trying to take a cut of fees for every email that gets sent over an open internet protocols, because they don't, the transaction will go through the blockchain. So whether it's Ethereum or in this case, so almost like the users will have to pay two fees. One is the Ethereum fees and one is the Apple fee. So we'll see how this develops, and see if Apple and Coinbase will find a solution to this, or if they just insist, and that would basically we'll see. It could mean that a lot of the crypto traffic moves to other devices if the other devices are more compliant than the Apple system to to enable these transactions. Okay, and let's close also the news by having another look at Ethereum and the difference between the pre and post merge. So these are statistics from since they went from proof of work to proof of stake. And as you can see at the moment, the increase, so this is the inflation, okay, Ethereum inflation, because at the moment Ethereum doesn't have a maximum cap like Bitcoin and Cardano is open cap, but since last year they started burning part of the transaction fees they generate. So so the number, the net effect has been to reduce dramatically the number of new coins in circulation. So this you'll see is almost like 3 months now, and the new coins that have been generated is like 570 Ethereum, compared to what would have happened in before the merge. So in a proof of work, that would have been almost 1 million Ethereum. So you see now the difference on the inflation rate before the merge was 3.5%. And this orange one is, by the way, the inflation rate of Bitcoin. You know, because at the moment the new Bitcoins are being generated with every block. Yes, Bitcoin has a maximum number, but that maximum number will not be reached until well into the next century. So at the moment, the 1.7% is the Bitcoin inflation rate, which, by the way, is similar to gold inflation rate. Okay, so the new gold is dug out from gold mines every year. So, and you see that after the merge, this has gone down to less than to about 0.1% at the moment. Okay, so this is also something that needs to be taken into consideration if you are trying to think of you know, Ethereum as an investment, and to get an idea of you know, how much the supply could grow over a period of time, because obviously the more coins into circulation, you know, potentially the same value gets spread over a larger number of coins. But you can see the kind of the effect, and everybody expected this to happen after the merge. So we weren't quite sure if this will generate actually a deflation, so for this number to actually go negative. So that would mean a decrease of number of Ethereums in circulation every week, or to be like now at the moment where it's almost like stationary. So 0.1% is kind of like negligible. You can see the effect, the difference between, you know, this is doing the proof of work when we would have almost 5 million Ethereum being generated, to now where the expectation will be to about 622,000. Okay, which I don't know. We'll see how that what exactly would happen, but this is the total supply of Ethereum as well. Okay, so from 2016, you see we had, you know, about 70 million to the number now where we are over 120 million. That now it seems to be that 120 million will pretty much probably stay the same, or might even decrease slightly. So these are just projections, okay? The projections are that by the end of 2024, we might actually have 3.5 million less Ethereum than we have now in circulation. Okay, I think I'll pretty much covered what I wanted to cover. Maybe I'll give you just another look at Bitcoin prices at the moment. As you can see, still we still in that region, kind of within $50 of the 17,000 mark. It will be interesting to see how this moves today. So this is a 1 hour chart. If we go into a smaller time frame, be interesting to see what happens. Oh, sorry, didn't mean to do that. interesting to see what happens, with the option expiry. Okay, so 20 minutes to go. So let me stop sharing for now, and let's see. Let's take a few questions. So feel free to unmute yourself to our questions, or I'll see if there's anything in the chat. Pierre was saying Luno closed their savings account option on the exchange to investors a couple of days ago. Yes, I mean, at the moment, I suppose they're all trying to survive, all the components of the DCG group. So we'll see what happens. I'm thinking, the more we go ahead without any major announcements of bankruptcy or anything like this, the better it is, because it means that they might be closer to finding a solution to the liquidity issue. But at the moment, it's kind of like, it's not something that we can predict by looking at the charts or anything else like that. It's kind of like almost outside of crypto, that could cause these movements. And funny enough, kind of in a way, crypto has rinsed itself for some of the bad players, like FTX and maybe DCG will be part of this as well. So we won't know if they're still going to be there in the future or not. But definitely, we are moving away from kind of like bad habits. So it can only be a good thing for crypto in the long run. The big problem is that we already have Celsius, Voyager, FTX failing this year. Any more of these could actually cause an overreaction from legislators. So that's the big worry for me more than anything else, because regulation is coming, but we want it to be kind of like a calm process and not just like a knee-jerk reaction, to just reply to these problems that are happening. The same as what they do here in the UK, probably the country with the largest number of speed cameras. So as soon as there is an accident somewhere, they place a couple of speed cameras on it, and those stay in place even if the accident rate drops in a certain place. So the same here. So the kind of like regulation that will come in place now, if it's too restrictive, that would then could restrict activity, at least in crypto in the US, for a long time. So we have to watch it, but it's also not so much a crypto issue right now, but it's a outside investment issue. Okay. Carol, with MetaMask changes, how can we increase our privacy? You got two ways of doing that, Carol. You can either use a VPN that will mask your IP address, or you can change your RPC provider, which is basically the gate that will gives you access to the blockchains. Okay, so by default, MetaMask uses Infura, but you can use a different RPC, and I can show you. You can go to Chainlist. Let me just share my desktop again, my browser. So you can go to Chainlist. Chainlist.org. Okay, and so this is the Ethereum mainnet. Okay, and as you can see here, these are all providers of access to the Ethereum mainnet. Okay, so some alternative access providers, it could be Anchor, for example, this provider here, as they publicly announced that they're not collecting IP addresses, and they providers of nodes across a number of networks, not just Ethereum. So, and the other thing that you can watch also, you can watch the privacy settings here. Another actually famous provider of access is the Pocket Network, which again provides access on many different blockchains. As far as I know, they don't collect any API, any IP information either. Okay, and so there are the two things normally that you want to look at is one of them is the latency, so which one is the fastest provider, okay, and the other is the privacy settings. So if you want to know how to change the endpoint on MetaMask, you can just click on here, and it bring up your guide on exactly how to do it. Okay, it's basically it takes 2 minutes, Carol. So it's not difficult. It's not difficult at all. Okay, but those are the two ways that you can protect yourself from, say, unwanted storing of your online activity, which is not welcome. Okay. There's also Kim, what do you mean with the FX impact in general? Well, in general, we're talking about forex pairing. I assume, Kim. Yes, the one thing they should, if you are playing in the forex markets, the one thing you should always open before you do anything else, because most of the pairs that you would trade are US pairs. Okay, so the first thing you should do every day before you start trading or whenever you do it is have a look at the at the DXY, the dollar currency index. Okay, because that represents the strength of the dollar against a basket of currency. Okay, so it's trading against it is foolish. Let's put it that way. Okay. Now, when I show the Australian dollar, US dollar chart, could you explain again why is the Australian dollar getting slightly stronger compared to US dollar? Okay, the reason was the inflation rate that is going up in Australia. Okay, so when the inflation rate goes up, there is an expectation, and the central bank will then raise interest rates to control inflation. Okay, so if people think that the interest rates will go up in Australia, then there is obviously you will get more money for your deposits. You know, if you're savings or if you're buying bonds in Australian dollars, so it becomes kind of more competitive compared to other currency because you get more for holding Australian dollars. So that's the simple reason. So if you look inflation numbers, that it's almost like you can use them as a leading indicator because you know that the central banks will have to react to those because that's in the every central bank's kind of remit is to control inflation, and interest rates is the main tool they can use to control inflation. Yes, it looks at the investor, not the mortgagee view. Yeah, definitely, definitely. Because the central banks will be, by controlling, by raising interest rates, they're also trying to slow down economic activity. So there are two factors. Once the savers get more for their money, and investors that buy bonds get more for their money. But from the other point of view, by investing in bonds, you kind of take money out of circulation. And also by raising costs for people, they have loans, credit card loans, normal loans, mortgages. It means that there is less disposable income for people to spend because they have to spend more money servicing their debt. So they are basically trying to slow down the economy so the inflation can get under control. Okay. Any other questions? Okay, I just remind everybody, as usual, that Jonathan's session on Cardano will follow at 9:30. So Jonathan, just don't let me ask you every time. Just do it automatically. Okay, just put your link on the chat box.
Thank you. I will.
My buying tip for the week. Carol. I don't know if I've actually got one at the moment. I'm kind of like I'm a bit nervous around the markets right now. So at the moment, the only buying and selling I'm doing is based on charts. So kind of like short term going from supply to demand for demand to supply. But it's not. I wouldn't be taking any long-term positions right now. Apart from kind of like new projects they are launching that are interesting or something like this. But there's nothing that would take, really I feel comfortable in just to say, yeah, go and buy this now. The one thing I can say is that these prices are, whatever happens in the future, and if there is a collapse of the DCJ or Genesis and all the connected projects, we might see another capitulations in crypto. Okay, but at the same time, the prices that we are seeing now, probably we will not see again for much longer. So what many people are doing, they have money to invest, they're starting to do dollar cost averaging, because not knowing exactly when the bottom will be, buying now, we expect a definite move out of this bear market by at least the end of the first quarter next year. So if you buy a little bit of, instead of actually put all your money in one go, if you start buying across time, then you will find that your portfolio would have been bought at an average of prices in the bear market. So you lower the price of entry for your portfolio, so that when the prices start going up again, then you'll see a really good returns. But not one projects across all others. I mean, the usual suspects here. And when we are in a bear market like this, I wouldn't go too far from the major projects, because there is still a lot of uncertainty. Some of the smaller projects may just disappear. But if you keep averaging in for the usual Ethereum, Cardano, Polkadot, Cosmos, all the big projects, BNB if you like it, but I will stay away. The only one I will stay away at the moment, because it's highly speculative, is Solana. Okay, not because of that I'm not a particular fan of the project itself, but the fact is that they are connected, very highly connected with FTX, and a lot of their tokens are in FTX as well. So until we know what the bankruptcy proceeding, and the administrators will do with those tokens, it's just highly speculative at the moment to invest in Solana. It could everything boom all of a sudden, and then you look like you've made a great investment, but we might be in a situation similar to Ripple. So why do you want to go and put your money in something that you can control? So that's what I'm saying. Apart from that, the rest of the the strong projects look, they all look like a strong buy at the moment, to be honest with you. Okay. Come on, guys, keep them coming. Any more questions? Don't be shy. So if you don't have any more questions, then I'll give Jonathan a couple of minutes to then give us a preview of today's session on the Cardano Q&A.
Luca, do you know anything about Binance stopping trading on Serum? I've heard that.
I mean, yeah, obviously, Serum is a Solana project, so highly affected by FTX. So they kind of like, I don't know. I mean, I haven't seen the announcement, Paul. So I don't know if it's temporary or if good. Probably, I think is a temporary solution at the moment, because it's, again, there's so much of it that is connected with the FTX problem. So, Jonathan, do you want to give us a kind of like a sample.
Well, our sessions tend to organically spawn from from us being stuck with things and figuring out how to fix them. So yeah, individual things probably could look at today. One of them is Genius Yield, which is one of the major DeFi platforms being built on Cardano, headed up by Lars Brunjes, or not headed up by, he's one of the founders, Lars Brunjes, who's the main educator for IOG. So he's the one that coached all the Prism pioneers, all the Plutus pioneers, which are the underlying language and the underlying identity system being built on Cardano. And he has put his brains behind this DEX. And there was a really good Q&A yesterday with the founders, Lars and Marvin, describing the difference between their DEX, their launchpad, and what else is sort of arriving within Cardano. And it was really eye-opening in how different a true UTXO engineer, which is how Bitcoin reaches consensus, and how Cardano does well. If you understand that UTXO model, which is like a cash-based model rather than an accounting-based, an order book model, account book model, then you can design things in a different way. So they were talking about their DEX will have no impermanent loss risk because they are doing an order book model. But they're innovating in that they're allowing liquidity to be added to the exchange in a live market situation. So you'll be able to go to the exchange, provide liquidity in either a single token or a pair of tokens, whatever you prefer. But that the price that you set won't change. You will have to either manually change it yourself, so that then you're avoiding impermanent loss because none of the automated transaction price changes that are being done for you, or they're working on a yield optimizer, which will actually automate those price movements for you, but ensure and guarantee that there's no permanent loss. Now, of course, you're buying a token, and if the token value drops, then you've lost value. But ultimately, you won't lose out with one token for the sake of another.
Yeah, it's similar to what Uniswap have done with the V3 utility. Okay. Yeah, because they again you can provide liquidity in a certain range, a certain band. Because the problem with liquidity on some of the liquidity providers is that your tokens can be then exchanged at any price, and so that's when you lose a lot, is at the extremes. But if you say, well, I just want my liquidity to be used in that range, then you can limit you can limit your impermanent loss. But this is kind of like it's great because it's such a new sector still. So it's good that they kind of like develop every new project that comes out. That's something else for the users, for the community. So you're getting to the point where you can actually, you can trust, and that's the word. Things, with your deposits.
Yeah, that's the thing as well, is that they're big, they're IOG team who've launched themselves on their own, and serious backing, and they're doing everything open source. So all their technology is up for grabs by the whole Cardano community, which is a really excellent. I love that approach, because it just means that we're not zero-sum minded. We are collaboration minded, and that we can all win in this. And so the thing that they've done is they've split the ordering from the fulfillment and from the liquidity provision. So actually you can partake in any portion of those as a provider and earn from it. So yeah, and that means that other DEXs will be using their orders and fulfilling them for them. And already we've seen that within Cardano. Uniswap does a lot of aggregating of the DEXs. But yeah, effectively it'll just become a large market, fluid market, rather than having to dedicate to one siloed area. which is very, very exciting. Sharing and caring way of generating cash.
Fantastic, and I can see that this is happening more and more in Cardano, and kind of it's the ecosystem getting ready to the big numbers that will be coming. It's great. No, fantastic. If it would be good to have a. Do you know if they actually have a recording available?
It was on YouTube. So yeah, I'm sure
it will be. Okay, we'll just put Genius Yield on YouTube. It should come up.
I'll drop the link. Well, I'll certainly share it on the Discord server.
And one more reason, just wait for it. So one more reason for people to join the Discord. Discord call. Okay, guys, I know that many of you are keen to go also on the Genius U event that was yesterday and today. So we'll end the call here, and we'll be seeing you either on Monday or on next Friday. So have a great weekend, everyone, and we'll see you soon.